Hey, Jason here. Today's video, I'm going to tell you why Tesla and Elon Musk should issue an enormous amount of shares. And I'll kind of go through an exercise on how to estimate how many shares they should issue. Before I get to that though, I know to let you know you can get this podcast or this video as a podcast anywhere in the world for free on all major podcasting platforms, iTunes, Stitcher, SoundCloud, Spotify, Anchor, and more. You can get this as part of the I Love Value Investing podcast anywhere in the world for free. If you like this video and our other videos, make sure to like, love, share, subscribe, and hit the notification bell so you're notified every time we release a new video, and release new videos all the time. So, almost 100% of the time, if you followed me for any length of time, I talk about how share dilution, share issuances are bad. And almost 100% of the time, that is true. The one time it's not true is when your stock is overvalued. If your stock is overvalued, you should issue shares. Why is that? I'm going to show you today. Using Tesla as an example. To give you some background before we get into that though, why am I talking about Tesla? Its stock has gone up so much in the last year plus that Elon Musk was, I think for 3 days, the world's richest person. Even more richer than Jeff Bezos, richer than Bill Gates, richer than everyone. In one day, recently, I'm recording this on January 20th, 2021. I think a couple days ago as of this recording, maybe last week or the week before. Tesla stock gained $60 billion in market cap in one day. That's equal to the entirety of General Motors stock is worth. On top of that, on I believe December 1st, Elon Musk said his stock is so overvalued that it could be crushed by a sledge, like a souffle, and being hit by a sledgehammer, I think was the quote. The stock is overvalued by an enormous amount. People are buying it because of momentum, and because, frankly, it just keeps going up. And they're speculating and betting, essentially, on Elon Musk to be able to continue Tesla's great results into the future, especially with Joe Biden becoming the new president just about an hour ago as of this recording, and his focus, or his promise, I guess, on green energy technologies and electric vehicles and stuff like that. This is all great for Tesla shareholders now. Frankly, it's okay for Elon Musk. He's not going to sell any major portions of Tesla stock because he has bigger plans like going to Mars. And Tesla is a big part of that. So he's not going to sell a ton of stock. So on paper, he's richer, but in practicality, he's not, because he'd have to sell the stock to realize those gains. Let me preface the next conversation we're going to have about this share dilution and its massive overvaluation with I love Elon Musk. In terms of, he's probably one of the people I most admire on earth right now. People don't really shoot for the stars anymore, and he literally does. He wants to take humanity to Mars, the moon, and Mars and beyond. I've read his autobiography. I think it was an autobiography. Either that or his biography. Love it. Admire him. Admire his entrepreneurship. Admire everything he's built, from, I think it was Zipcar to PayPal to Tesla to Solar City to all these other things he's doing. I admire his ambition. Greatly admire him. Hope he succeeds, because I love space and technology personally. And I hope he succeeds. But his stock is massively overvalued. Massively overvalued. To put this into some context, or to some more context, because I already told you about the GM example. I looked, I think it was a month or two ago, and Tesla stock by itself was worth more than every other major auto company in the world. Toyota, GM, Ford. I think I might have thrown Fiat Chrysler in there as well. It was more highly valued than all four of those companies combined. That's that's insane. Again, I admire Elon Musk. I love Tesla. I want a Tesla. All this stuff. But when a share gets massively overvalued, and Tesla's extremely overvalued, one of the most overvalued stocks, probably when we look back 10 years from now, probably one of the most overvalued stocks ever. When a stock is overvalued, it means a couple things. It makes it more risky because there's less margin of safety owning its stock. To illustrate that, at its current valuation, Tesla is essentially literally going to have to take us to Mars and build a colony on Mars, and everybody on Earth is going to have a Tesla to make Tesla shares worth what they are now. That's probably a slight over-exaggeration, but it's not a massive one. When a stock is massively overvalued, not only makes it more risky and lowers the margin of safety, it lowers the amount you should expect to earn owning its stock going forward. The reason is, that's because the profits would essentially have to stay extraordinarily well to catch up with this current valuation level, and probably actually increase to keep up with this massive overvaluation now. And the stock price would have to stay about the same for those to catch up, for the profits to catch up with the share price. So that's unlikely to happen, which means your investment returns going forward should be lower. Another risk with highly overvalued companies is that if something not even bad happens, if something just kind of okay happens, it can crush the stock. Because expectations are literally, again, sky high. I'm sorry to keep using the space puns here. I probably will. I'll probably keep doing it. But unless results continue to be extraordinarily good or increase from their current levels, if they drop even a little bit, Tesla stock is likely to get crushed. That's what happens when you have an overvalued stock. This brings us back to the share issuances. When a stock, or the only time a company should issue stock, is when its shares are massively overvalued. Why? Because let's say Tesla is worth $1. If you can issue stock and generate $10, after all fees, you're essentially gaining that $9. You're using your shares as a currency to extract $9 per share off of something that's worth $1. I hope that makes sense. Because frankly, I can't think of another better way to put it. I was trying to think of another way. I can't think of another better way to put it. So I'll reiterate that again. If Tesla shares are worth $1 per share, again, this is just an example. They're worth more than $1 a share. I'm just giving this an example. And Elon Musk shares are right now massively overvalued. You can get 10x value, or you can get $10 per share. Let's make it simpler. So your Tesla stock is worth $1 per share. It's, again, this is an estimate, 10 times overvalued based on your estimates. And you can get $10 per share out of it by issuing stock and selling new stock on it. You're gaining the spread there at $9 per share. You're gaining $9 per share of a $1 stock because of the overvaluation. This is why Elon Musk and Tesla should issue an enormous amount of shares. Enormous. Because they are enormously overvalued. Right now, I'm looking on my other screen. I moved my screen over here to my other one. They have an $806 billion market cap. Their PE is 208. And actually, let me bring you in here so you can see these. PE is 208. Price to sales, 30.5. Price to book, 49. Again, these aren't the most super important numbers, but I will show you which one is very important. Oh, that was even worse than I thought. So, enterprise value to EBIT. To illustrate this valuation, or to illustrate how overvalued Tesla is, I look for stocks to be selling at an enterprise value to EBIT ratio below 8. This is 494.25, which means by this one number, and again, this one number does not count for the entirety of the evaluation. I would need to do more analysis to figure this number out. But just based on this one number, Tesla is overvalued by almost 61 times what I look for to consider buying an undervalued investment. Meaning, if Tesla shares are worth $1, Elon Musk can generate almost $61 per share if he were to issue stock right now. Stock he could use to fund growth in SpaceX or Tesla or Solar City or going to Mars. Money he could use to, let's see how much debt they have. They don't have that much debt. So, ignore that. I was going to say they could pay down debt, but they don't have that much debt. So, they could use this money to fund future growth in technology, in patents, in research. He could even use this money to expand operations in Solar City or SpaceX. Again, depending on what the rules and regulations are about taking this money out. And I know Solar City has combined with Tesla. SpaceX, I think, is still a completely separate entity. So I don't know how that would work. But Elon Musk and Tesla could use this money for something. To give that some context, or to give that more context, let's see how many shares they have. So they have 1 billion shares. Let's just use that as a number. So they could generate about $60 billion if they were to issue if they were to double the share count from 1 billion, again rounded down, to 2 billion, they could generate $60 billion because of this, or approximately $60 billion because of this. There's the Elon Musk quote I was looking for earlier. Because of the 60x overvaluation, they could turn $1 billion into $60 billion just by issuing shares, because that's how overvalued the stock is. Would it work out exactly like that? No, because if they issue a massive amount of shares, that's going to lower the share price and lower what the price of the shares they can sell. So it wouldn't be exactly an apples to apples comparison, but it'd probably be pretty close. Let's say they could only get 30. Let's say it's real crazy, and they say they're going to issue shares today. They're going to issue 1 billion new shares today to raise $60 billion. Let's say the share price goes in half. They'd still get $30 billion out of $1. That's, again, how massively overvalued Tesla shares are right now. I've never owned Tesla shares. I know this question is going to come up. I admire Elon Musk. I love what he's doing. I want a Tesla. I hope he succeeds and goes to Mars. I love space. I love technology. I've never owned, and I greatly admire Elon Musk's not only capital allocation ability, but his ability as an entrepreneur and his ability to overcome, frankly, near tragedies, because people forget now that its stock price is going nuts. Tesla almost went bankrupt several times. He essentially had to use his power and force of will and connections and creativity, whatever, to figure out how to keep the company alive. But every time I bring up Tesla, you don't own Tesla shares. No, I don't, because it's been perpetually overvalued. I don't buy overvalued stocks. Doesn't matter who it is. If it's, again, one of the people I admire most in the world, and I think, and not only do I think Tesla and Elon Musk is going to achieve these goals he wants. Again, I hope they do. But I don't let my personal emotions and wants and needs and desires come into the equation. I just don't buy overvalued stocks. If you own Tesla stock now, maybe a good time to sell before it crashes. Because at some point, I don't know when, could be tomorrow, could be next year, could be 10 years from now. I don't know when it's going to be. At some point, it's going to crash. So if you own shares now, you might want to sell, not all of them, you might want to sell some of them. Because again, it's going to crash at some point. I don't know if it's going to crash spectacularly. I don't know if it's going to be a 10% crash and come back. Again, I hope he succeeds in these goals. So if you're a long-term investor and you own some shares, you might want to sell now some of your position to lock in profits and keep the rest as kind of free money, because you've made a ton of money at this point in all likelihood. If you're looking to buy new shares, I wouldn't buy new shares right now. It is, again, it's so overvalued. So overvalued. I can only think of one company off the top of my head, which I'm going to do a video on in the future, Nikola, that is more overvalued right now. Neo, maybe. Again, I'm going to do another video on that. For Javier, he requested video on Neo. I've done a little bit of research on them in the past. They're overvalued. Nikola's overvalued. Tesla's overvalued. This entire space, kind of electric vehicle space, is massively, massively overvalued. And at some point it's going to crash badly. I don't know when, I don't know how badly it's going to be, but it's going to crash and it's going to harm a lot of these companies. Will it crush Tesla most likely? No, because it can sell shares. Another reason it should sell shares is to build up a war chest. If it wants to issue 6 billion shares and get $60 billion, it only have to invest that money if it doesn't want to. It can keep it as a war chest for when the when the market does crash. Then it could buy out Nikola and Neo and whatever other electric vehicle companies are out there and dominate the entire industry. That's an option. Elon Musk, if you're listening, give me a call. We can talk about these ideas. I'm just joking, of course. But that would be awesome. But when you have cash and you have an overvalued stock, which is a currency, a form of currency, it gives you options, just like cash does. Which, frankly, it realistically could, if and when the market crashes for electric vehicles, and it issues shares now, $30 to $60 billion worth of shares, could reinvest some of it, could put it in the war chest, could buy out competitors or potential competitors, could shoot a rocket to the moon. I don't know. Whatever Elon Musk wants to do. But I hope this has been helpful. I've been joking a little bit in here. I'm trying to be a little bit entertaining here because share issuances and share dilution is frankly a boring topic. I hope you appreciated this. If I missed anything, if I didn't think of something, if I should explain something better, let me know in the comments below. If you're listening on the podcast, make sure to like, love, share, subscribe, and comment and leave a review. We'd really appreciate that, because the more reviews, views, and listens we get to our content, the more we can help, the more people we can help. If you're listening on YouTube, again, like, love, share, subscribe, all that good stuff, and hit the notification bell so you're notified every time we release a new video, and release new videos all the time. If you're looking for free resources on how to become a better investor faster and analyze stocks better and faster, check out the links below. We have free resources. We have 5 free gifts, including my valuation template, which my other stock analysis videos are based on. You can get that for free, along with 4 other free gifts. You can get a free PDF copy of my book, How to Value Invest, or you can get our free guide, 7 tips to picking great stocks, 3 times you must sell. You can get all 3 of those for free at the links below. Also, if you're looking for more specific help from me on how to become a better value investor or a better investor faster, check out the link to our masterclass below. Again, I hope you enjoyed this, because most 99% of the time I talk about how share dilution is bad. This is the one time it's not, and Elon Musk should issue as many shares as he possibly can to raise as much money as he can for investments, for war chests, for buyouts, and also it would help possibly, or it would help deflate his extraordinarily large bubble in his stock, which again he admits to himself in the quote I said earlier in this. So I hope you enjoyed this, but until next time, talk soon. Bye.